All right, what's up, guys? Welcome to our October 20th edition of This Week in Crypto. What a wild week of trading and market activity we saw. We'll be getting into a ton today. As I begin, I want to remind everyone we are here to discuss the anomalies and the activity and the bullish and bearish divergences happening in the on-chain and social side of the crypto markets for the purpose of helping to analyze and showing what Santiment is able to do and the predictive power of our metrics. So if you're here for this kind of analysis, we love to have you. Don't forget that we aren't here to say this asset's going up, that asset's going down. We're here, excuse me, to simply give you as much info as we can based on objective data that is going on, and doing our best to answer any questions you have. So definitely load those up. Let us know what assets you'd like to take a look at. And we will kick things off here by looking at the bright sea of green that has shown for the vast majority of assets here over the past week here. So if we take a look at just Bitcoin by itself, up 9.8% in the past week, currently sits at just below 29.7K. I checked just a couple hours ago while I was still sleeping. Bitcoin had crossed 30K for the second time this week. The first, of course, was on Monday, and Monday was a very interesting and peculiar day that will go down in crypto infamy as a day where a very reputable source, Cointelegraph, which Santiment has spoken with and regards highly and still does, they made a mistake and they posted that the iShares ETF had been approved by the SEC, which sent understandable shockwaves throughout the crypto space, with many people getting very euphoric, buying many assets, getting very bullish and behaving as such. Problem is, this caused over $100 million worth of liquidations from shorts that had been sitting on exchanges. And this inorganic pump to 30K, of course, went right back down after the news was found out that this was not a real announcement. And it caused many people to distrust crypto more than they already had, whether they were bullish or bearish prior to this event happening. So that was a worry, and we saw that markets could do just about anything from there due to the fact that something that wasn't supposed to happen had just happened. Of course, many other people benefited. We saw, as you would imagine, many people will set limit sells on exchanges at 30K. So a lot of those cells got filled to the delight of many, especially when they saw that markets went right back down to 28K or so within just a few hours. But assuming they didn't sell, or I'm assuming they didn't buy once again, here we are once again back at 30K or just below it at least, this time for more organic reasons, simply whales and sharks showing some positive signs and some other activity that we'll get into that shows why this was a matter of time, really. And we will have a lot on the social end as well, showing how bullish versus bearish traders are. And we're going to be, of course, exploring a live look at how people are reacting to this second visit to 30K for Bitcoin, and obviously many other assets being up as well, to see what's to come, right? If people are overly bearish right now, that can be a concern. I'm sorry, a good thing for crypto's future due to the fact that people are skeptical of the fact that crypto is finally bouncing and breaking out of its range. If people are euphoric and getting very bullish, that's the concern that we don't want to see, because it indicates maybe a little too much FOMO, people getting trigger happy, thinking we're now about to go to 40K. You don't want to see that. You want to see a lot of doubt and uncertainty related to markets. Those are usually the ideal scenarios for crypto markets to be able to continue to climb and make new year highs, which I know many have been salivating for after such a long stretch here in that 26 to 29K range, pretty much for the last 3 months straight or so. So ETFs are still, of course, a big part of the news. We are aware that many people are kind of still watching what the S&P 500 is doing. We reported yesterday, I'll even pull it up really quick and we'll come back to the screener. We reported yesterday that Bitcoin had actually been trading very close to what gold had been doing, almost eerily so, right here. So we say, good sign, Bitcoin is now moving similar to gold as both rise to highest market value since August. This was yesterday where Bitcoin was at 28.8. Of course, it got all the way up to 30 before dropping to 29.7 as of now. But look at how close they really have been just over the past 8-ish days or so. And this has been as the dollar value has pretty much hit its highest level since the beginning of the year, being a little over 106. Normally when the dollar is going up, that can have or generally does have a negative impact on crypto. Crypto is something that is used as an alternate to fiat currency. And when fiat currency is starting to get more trusted and more valuable, crypto can take a bit of a hit. But at least for now, that has not been the case. And we've seen crypto and gold climb well. And many of you may have heard that crypto is often referred to as the digital version of gold. So those alternate investments to the S&P 500 right now are really paying off for people. You can see the S&P way down here. It's been kind of dropping back down closer and closer to its month low or so. So it is actually a good thing to see that there is very little correlation at the moment between crypto and equities in particular. When you see less of that, that is more so when crypto tends to break out in terms of historical scenarios. When there's a very tight correlation, crypto is usually kind of at the stock market's mercy, and that is not the case right now. There have been moments in 2023 where that has been the case, especially in 2022. They were just latched onto each other outside of the very end of the year when the FTX implosion kind of threw a huge wrench into crypto. The S&P was rising at that time and crypto dropped off a cliff. But that's in crypto time, 11 months is pretty much ancient history. And it appears as though traders have washed their hands of that and it recovered back to 30K for now. Now the question is, will it hold? Obviously, we are back below it technically as of the time of this video, but it could be a very different picture just by the end of the day. So going back to the screener, we can see Bitcoin up plus 9.8. Ethereum had a modest week at plus 3.6. It is back above 1600, which is a good emotional support line. Solana was one of the big breakout candidates, up 24%. It had been climbing just in the last couple of days pretty significantly. Right now, nearing $27 once again. Bitcoin Cash doing pretty well. Anything ETF related, especially like, well, I'm blanking on the name, Grayscale. When that's mentioned, Bitcoin Cash tends to do well. It's up 11.6%. The big, or I should say second biggest winner of these top 100 assets would be Unlimited IP, up at plus 69%. Bitcoin SV plus 59%, and then Hex has made a huge rebound, back up 75%. Very interesting to see with Richard Hart, the founder of Hex, kind of coming under fire over the last few months, but at least his asset for now is looking up once again. So many projects that have enjoyed anywhere between modest to pretty eyebrow-raising price gains, and we'll have a look further as we get to questions, or we just look at some that Santiment has been keeping an eye on ourselves. Let's see some other news here. Some other posts that we mentioned the last few days. Yeah, this was just yesterday. You can see Solana here. That was one of the big positive signs, and it's continued to break out ever since. Look at the open interest. So we had, this was just as of yesterday, so still very relevant. We had open interest toward Ethereum really starting to grow, while Bitcoin was really starting to decline. And we pointed out a similar trend that had happened just about 3 weeks ago from September 28th to 30th. Look at how Ethereum here had this huge rise while Bitcoin's open interest fell. So there was like less big longs opening toward Bitcoin and less big shorts, less options as well. And that creates a scenario where it often leads to a rise because obviously with those longs closing, the big leveraged longs can often be kind of a preventative tool that keeps Bitcoin's price from growing. We like to see that a lot of shorts are happening, or there's just less open interest overall in Bitcoin as a sign that the price can often break out. You can see even after Bitcoin did eventually break out and then crashed, we can see open interest dropped again. So a lot of longs were liquidated here. I should say shorts, that is. And then people who were trying to excessively long after this rise, they were liquidated. Price fell back down, open interest went down, and then it repeated the cycle until it happened once again. So we'll be watching to see if Bitcoin's open interest starts to grow once again now. Ethereum's still relevant as well. If that is kind of growing while Bitcoin is staying flat, that would be a good sign. But open interest is a relatively new metric on Santiment, and we definitely recommend watching that one. We also noted the large jump in 100 addresses with at least 100 BTC in them. There was a huge 5.3% upswing that started just a week ago on October 13th. And that was a pretty good sign. This was the largest jump we had really seen in a single day in 2023. So probably a pretty big deal there. So Bitcoin had already risen 5.3% since this, and it just has not cooled down since. We'll take a live look here in just a moment to see what's going on with those whales. Moon, Brick, and Donut, if you've been following the Reddit drama, they took away the community points that rewards people with those assets. Ethereum's billionaire addresses also enjoyed some growth, and we're keeping an eye on that one still. Ethereum has yet to have its own little version of a breakout, so people are beginning to show that they believe that's long overdue. Also, look at how Tether has just continued to grow in these top USDT wallets. The top 10 own just shy of a quarter of the entire supply now. And you can see how far they've really grown since July with this blue line here. Also, the red line, these are the billionaire addresses. And this was right after the fake ETF report happened. They just continued to grow, showing there's more and more buying power from the largest wallets out there. So that's interesting as well. Those were some of the more recent posts. Just trying to see if there was one more big story. Yeah, this was just the initial social volume that occurred related to the ETF news. And you can see ETF here in blue, iShares in red, and the mention of 30K here in gold all had big spikes right when it happened. And that, of course, was right after the huge top. Price continued to grow up to that point. It was up to 28.3 at the time, and then it kind of dropped back down. But you can see just what massive reactions people have to short swings. And of course, just as of a few hours ago, that short swing has happened again. So we're going to have to see what the sentiment looks like. Moving on to look at some of the on-chain metrics on Bitcoin right now, we can see the transaction volume hasn't really made much of a change. If we zoom in a little, we could potentially see a few more spikes. And yeah, the one on Monday here is pretty noticeable. This was the big fake news spike. And then right now, today, we're seeing the second largest spike since late August. So trading volume is up, on-chain transaction volume isn't looking as exciting, but you can see throughout the week, we've been getting much higher bars than we're used to. So utility had definitely been picking up, pretty much using the fake ETF news as a trigger point, which is quite interesting. Additionally, we can see daily active addresses, really not too special at the moment, kind of sitting in the middle range compared to its past 3-month average. Circulation, it did have a few big days here. That is nice to see, as circulation has really been struggling for about a year now in Bitcoin, and more utility and unique tokens circulating from wallet to wallet would be a very, very solid sign that we could be on the verge of a big bull run. As far as MVRV goes, so this is the average trading returns from 30-day traders as well as 365-day traders. They are both up, as you would expect, with today's rise. As of now, the 30-day average return is at plus 6.8%, and the 365-day average return is at plus 17.2%. So both are at their highest points that they've seen in the past 3 months, if we zoom it out a little. Yeah, the last time we got to this point was right around July 13th or so, just after the past 3-month cutoff. And that goes for the 365-day as well. So yeah, we are a little bit high now. It looks like average returns are getting closer to that danger zone. There is absolutely some room for prices to continue to grow. If we get up to 31, 32, or even 33K, that's where you'll start to see average trading returns in this short time frame really get close to that dangerous plus 15% level, which is usually the time in which prices tend to top out or retrace, like we saw back here in June when we first got that big spike due to the ETF news being introduced to the crypto audience. Now, very interesting sign going on with the funding rates. We talked about open interest, which is undoubtedly up now, but we can see specifically a lot of that open interest is going toward shorting Bitcoin right now. So people betting against the price of BTC, that's a very good sign, folks. It's often an indication that people do not believe the hype. They think this 30K rise is a fluke. And often what'll happen when you see a bunch of shorts opening as prices are rising is prices will continue to rise and shorts will get liquidated, with those liquidations functioning as rocket fuel for prices to continue growing. So no guarantee that's what will happen, but this absolutely increases the probability of a rise. And anytime you see a surge like this, it doesn't get much better than seeing a bunch of shorts suddenly opening from non-believers that this rally is real. Whale transactions, you can see they've sort of picked up. The $1 million plus transactions in particular, you can see a big spike here on October 16th. This was the highest that we had seen in about a month. And they haven't really slowed down. You can see 4 straight days between the 15th and 19th, or 15th and 18th, I should say, where we saw well over 9,000 100K plus transaction days. That's a big deal. So the whales had definitely been picking up prior to this big day we're seeing today. I'll come back to the whale tiers in a moment here. We'll look at a few more assets and their ratio of profit versus loss, but right now we can clearly see tons and tons of profit taking going on, which makes total sense when you hit a psychological resistance level like 30K. Obviously, limit sells all over the place, even the ones that may have happened on Monday during that very brief flash spike above 30K. People may have put up a new limit sell for 30K to profit once again. So those are going off, and anything right below 30K, people still may say, oh, we're very close to a top now. And they're just moving Bitcoin at a much higher frequency all of a sudden due to this new polarizing level that we're at, that's creating tension. It's creating people getting antsy and wanting to move BTC for the purpose of FOMOing in or FUDing out, depending on what side of the fence they're on. So this is right now the biggest ratio, one of the biggest ratios we've seen in well over a year. Mean dollar invested age. It's a little hard to see, but you can see that the curve of dormant coins sitting in older addresses, it's starting to flatten out just ever so slightly. This is a good way to see it. So this is like the usual slant. You can see I'm drawing right along July and August here. And if I stay parallel to that, right there, you can see, especially just in the past week, there's not as much of a slant upward, indicating that dormant coins are waking up just a tiny bit. It's certainly not a flat line by any mean, but we're definitely rooting for activity like this, where the mean dollar invested age suddenly flattens out. If it went down, that's obviously a sign of a bull run. In almost every case, if we see the age in which coins have been sitting in addresses suddenly moving down on average, that's a telltale sign that a bull run is on its way or has already started. So watch this one during these final 11 days of October to see if we can start to see justification that this price rise was real and go from there. Network realized profit loss. Yeah, definitely some realized profits going on. You can see this mini spike here. Interesting that we saw this one here, but it did not deter Bitcoin from having this rise that it had. And I'm not too concerned about this. It's not a huge, sizable realized profit spike, but it's enough that it indicates that people are getting some realized profits off of this surge. Supply and exchanges, we noted in one of our insights earlier this week that we were getting very close to a 6-year low, and that actually happened yesterday. Getting down to 5.67% of Bitcoin on exchanges. That is the lowest we've seen since December 2017. So just shy of a 6-year low, technically, but very, very good sign, indicating that there is just simply less BTC on exchanges that are at risk of being sold off at any given moment. That's generally why we like to see supply and exchanges going down, which it has been doing so quite significantly since May 1st. Take a look at social dominance as well. Bitcoin's being talked about at about 26% frequency compared to all top 100 market cap assets. Generally, more discussion related to BTC is a good thing, whether it's for FUD reasons or FOMO reasons. More eye on the top asset in crypto that drives the rest of the markets is generally a good thing and can lead to all markets rising, which is what we have seen in recent days. Yeah, and it did get it to a very low point just about 3 weeks ago, but it has since recovered quite rapidly. You can even see how it's kind of latched onto what price has done. When Bitcoin goes up, more discussion is had. When it goes down, everyone starts, I wouldn't say everyone, but many people seem to get swayed into talking about other altcoin pump and dumps instead. All right, let's look at the ratio of transaction volume and profit to loss using that special template I like to pull up. And then we'll look at whales right there. Oh yeah, so you can see Bitcoin off the scale here because there's about 4.5, no, 5.5, I should say, transactions in profit for every one transaction at a loss right now. So obviously huge profit taking going on for BTC. The rest of the top caps that we have highlighted here are pretty modest. Ethereum, XRP, Litecoin, and Cardano. They are up, which is understandable because those prices are moving in a positive direction, and they're all up this past week, just not nearly to the significance of Bitcoin. So this is kind of a worry. We'd like to see this start to flatten out. The hope, if you're rooting for Bitcoin to continue rising, is that a lot of people are FOMOing in right now or bought right around 30K, and they start to transact at a slight loss at the 29.6, 29.7K level to sort of even this out and make it so a lot of transactions are happening at a loss. And that would neutralize this ratio a bit. High ratios, as you can see, they're usually indicative of a top. Low ratios are more indicative of a slight bounce coming up. You can see a lot of those low negative ratios when there were more transactions at a loss happening. These happened at the bottom from mid-August to early September. Moving on to those key whale tiers. So we'll get rid of a few of the smaller stable coins right off the bat. BUSD and DAI are doing pretty well, so they're worth noting. But we'd really like to just look at Bitcoin, which you can see is up, Tether, which is down, and USD coin, which is also down. So starting with the good news, over the past 8 days, Bitcoin's supply on held by addresses with 10 to 10,000 BTC, which are kind of the key, smart money, if you like to use that term, those tiers, they have been rising pretty big. 66.79% of the supply held on the 12th, now at 66.92%. If we looked at that in absolute terms, 10 to 10,000 here. This yellow line shows, yeah, it's at its highest level all year. They're holding 13.06 million BTC after being at 13.03 million. So they've added, give or take, about 30,000 Bitcoin just in the past week here, which is pretty big, as you can see from this line. That's a nice level of growth. We can zoom out here a little for perspective, looking at the last year. Yeah, they're getting close to their year high now, highest level since right before the FTX collapse back in late October of 2022 is the last time they held over 13.03 million in BTC. So their confidence has been growing. And when we see their confidence grow, good things happen to BTC. When they are dumping, that's when upcoming price drops are usually in our future. So the overall amount held by these sharks and whales is certainly moving in the right direction. But if we look at the stable coins, we can see where the money's coming from. It isn't necessarily coming from fiat, which is usually ideal. If sharks and whales are adding onto their BTC stacks without dipping into their Tether and USD coin, that's the best, because it means there's new money coming from big sources into crypto. But yeah, we can see that as Bitcoin went up here, I'll zoom back in again, right about here on the 12th, that's where we started this rally, USD coin and Tether both went down in terms of the shark and whale holdings as Bitcoin went up. So we'd like to see these two lines not be falling too much. If they can at least flatten out as Bitcoin stays high, that's a good thing. If they continue to plummet, though, that means this could be a short-lived rally. It doesn't mean we'll drop back down, but it means that there's a finite amount of pumping that these sharks and whales can do because they're using their stable coins to create this pump. Yeah, we mentioned the funding rates also, still very low here, which is great to see. Lots of shorts. So from the retail side, the traders are non-believers right now, which can absolutely increase the likelihood of us getting quickly back to 30K and beyond. Make sure it's up to date too. Yeah, there we go. And then social dominance well above that health line in terms of a healthy amount of discussion related to Bitcoin. That's great to see. Okay, so we're about halfway through, and I wanted to take some time to look at the asset activity matrix to open it up to some other assets here, and we can also take some questions momentarily. But first things first, I want to show some nifty updates that I've made to this model. It's quickly becoming my go-to for quickly finding new news about what's happening in the markets and which tokens we should be keeping an eye on. The new addition is this price percentage change line. And it's really helpful because we've talked about in a few of our insights how you can get a lot of information when you see an asset that's hot, like we're seeing with hash flow, for example. Red and orange squares mean that they are that specific metric, like transaction volume, which is here for hash flow, or active addresses, or network growth. I'll just go through all of them. Whale transactions, the amount held by $100K to $1 million whales, social dominance, exchange balance, or age destroyed. So red is one of the highest days in the past 3 months. Blue is one of the lowest days in the last 3 months for that respective metric. And when you see an asset like hash flow with a lot of hot, you usually would expect that it's happening with a lot of big price performance where people are making the network hot because they're FOMOing in, or the asset is creating a lot of polarization due to the recent price spike. Well, in hash flow, that hasn't happened. So this could actually be a very good sign for hash flow because it's suddenly getting a very hot network despite prices not really being hot. So whatever reason, whether it's due to whales or something going on in the background, this network has picked up a lot for reasons other than just a price spike. On the other end, I'm trying to find a good example of it. Bluezell had been on a big spike, but it's kind of cooled down as of late. Here's an easy one. Loom, obviously one of the hugest gainers over the past 3 months or so. These percentages in order from left to right are 1-day change, which is plus 15%, 7-day change, which is minus 54%, 30-day change, which is plus 80%, and 90-day change, which is plus 157%. And as you can see, Loom is still very hot despite being one of the hottest assets all summer long. It hasn't slowed down yet. So that could be a sign that the pump may not be over yet. You'd of course have to look up Loom and see what the whale tiers are doing. You know, what are those $100,000 to $10 million holders doing right now? But that would be something you'd want to keep in mind as you look at the hottest and the coldest assets out here. If you're a big altcoin trader, you're going to love this. I promise. This is a one-page, all-you-can-eat model that'll give you as much information as you want to digest without having to open each asset one by one, tabbing over, looking at one metric at a time. It's all here, and it'll tell you when the data is fully loaded. I want to note, if you're using this full model as a Sandbase Pro member, you get this model as soon as you sign up as a Sandbase Pro member, or even during your 1-week trial, you can use this. And it takes a good 20 minutes or so to load fully. We have mini options available as well. So DM us on Discord, or just ask us in the support channel, and we'll get you that smaller model if you don't want to wait 20 minutes. But this is a model that only needs to be updated once a day. These are all daily metrics, not hourly. So if you can wait 20 or so minutes, sometimes even 25 on a slower computer, you'll be able to get all of this. Now, keep in mind, Google Suite has, for free accounts, if you don't have like the basic $9 or $10 a month Google Suite that Santiment has for our business, it'll stop loading after 6 minutes. So if you're going to invest in Sandbase Pro for the purpose of using this model, which we're seeing many people doing, I just to save future conversations like I've had, I really recommend that you invest in just the basic business Google Suite as well. We're not affiliated with them. We're not trying to sell you a Google Suite subscription, but for compatibility purpose, we recommend that, because then you get 30 minutes for data to load rather than 6 minutes. And obviously, you're not going to get 10,000 squares of data loading in just 6 minutes from any API out there. That's just the nature of APIs needing some time to load, especially with our Google Sheets tool. You know, there's data that needs to be pulled one line at a time, and it's not slow by any means. It's extremely quick, considering how much data is here. So just keep that in mind. But it's incredibly useful and something I am going to make a video on, and probably a written article on very shortly, to give you guys a more in-depth explanation. But let's get into a few of the assets that are standing out here. We can see some blues right off the bat, Cardano being one of them. It's seeing near 3-month lows in a lot of different categories like whale transactions, transaction volume, active addresses are very low at the moment. So that has been kind of a disappointment for a while for the Cardano community out there. I know we get a lot of requests for Cardano on a weekly basis to go over on these calls. Other cold assets, Reef looking very low, Quant, super low activity. True USD, the 5th largest stablecoin, that's very low. Even USD coin is showing some pretty low marks as of the most recent day. It'll update, by the way, for the most recent full day. So this is through October 19th, the end of day Thursday. The reason we don't have live Friday data is because they're all going to be a bunch of low numbers if we showed them, because we're looking at the total amount of daily active addresses in a day. And obviously, it's an unfair disadvantage to look at a day that's only halfway done versus a bunch of full days. So of course, that's not going to be fair data to look at. Pepe, the beloved meme coin from earlier this year, has really dropped off a cliff. You can see it's getting minimal activity compared to what it was seeing for the past 3 months. Let's look at the more fun ones, the hot networks that you may want to consider if you're looking for some long investments out there. Of course, do your own research, but 0x has really picked up despite its price looking pretty modest. I know it actually went through a big pump a couple days ago, but that pump came back down fast. So it's only at plus 2% in the past 24 hours, 5% the past week, 14% in the past 30 days, which is pretty in line with a lot of other assets. Melon is another one that's showing a lot of hot activity, big whale transactions right now, big transaction volume, and it's only up plus 10% in the past 30 days. We mentioned Hashflow. Holo is seeing some positive signs, also known as hot. Lido DAO is seeing some hot activity. Civic, just recently in the last couple days, lots of red and orange boxes there. Cream Finance, Linear. Linear is very interesting. Let's take a look at Linear on Sandbase for a moment, because we can see tons of red and orange boxes here, but it's down 24% in the past 30 days. This could be a good candidate to take a further investigation in right before we go into questions. Linear, the ticker would be LINA. Yeah, I can see why it's getting a huge spike. Look at this. on-chain transaction volume off the charts suddenly went from between 100 to 200 million transaction volume on average over the past week to 1.45 billion so far today. That's huge. So something is clearly going on. The last time we saw a big spike was during a top, but obviously prices have been moving very much down since the 16th alone. Its price is down about 18%. So I'm wondering what's going on here. Daily active addresses also through the roof. 200 unique addresses interacting on the network so far today, after it looks like the average was like 40 to 45 through most of the past 3 months. So more than 4x the amount of unique addresses interacting on the network. That's huge. Whale transactions, as we can see, that's a 3-month high, 21 separate $100,000 plus transactions happening so far today. So that number will likely rise. Now this is the important part. This is where you can really look at the context to see, is the smart money accumulating right now? So the price, okay, this can take a little bit of math. Price of linear is at 0.008 cents. So we'd want to look starting around 10 million to 100 million, and then 100 million to a billion. Maybe this one. I think this one could be the very small sharks. Let's check. 1 million times 0.008. Yes, so this is about $8,000 worth of linear held. We can include that. That's about the minimum that we would consider for like a smart money wallet for a typical asset. So if we combine all three of these, let's see what we see. This is just the number of addresses. Let's go 1 million all the way up to 100 million. 1, 2, 3. What? I'm sorry, 1 million up to. Yep, I had it right. 1 million. Oh yeah, up to a billion. There it is. Confused. So it's not looking amazing. This is of course just the number of addresses. So that number has not really grown. It just went from 86 to 88 in the past full day. Not really a big deal there, but this will be even more telling. One more time, 1 million to 1 billion. 1, 2, 3, confirm. We need to color that differently. And boom, now we have the truth of the matter, which is all of this activity is apparently a big coordinated dump. There are, why is it including 0 to, hold on, sorry guys. It was including one micro tier that I didn't want to be included. We want to make sure this analysis is accurate. Yeah, it didn't really change anything, good. So let's add the price on as well. Boom. Make those bars just for consistency and how we report this. So yeah, since September 22nd, they were holding about 49% of the supply. Now they're suddenly down to 43%. That's a pretty concerning dump. And that's why this asset activity matrix can alert us of such important stuff. We see all this hot network activity, and we see huge on-chain transaction volume and active addresses and whale transactions soaring. We get excited, but once you really see the context, you find out that it's actually due to a dump going on. So I'd be very careful with linear based on this data. It's indicating there's a coordinated dump, and hey, if it could even be an argument for a short rather than a long. But either way, this implies a volatility. So there's going to be some continued price action that is more significant than the rest of the markets in one way or the other. That we can say pretty confidently here. So that's kind of our recap on asset activity. You can, of course, if you want to just look at big price changes, you can simply find them by looking at the color coordination here. Telur, the big winner over the past 90 days, up 543%. And these colors, by the way, they're in relation to one another. So if you're looking at just the top left 1 day percent change, plus 21% being in green means it's one of the best performing assets over the past day. You can see a day where even a positive day, like plus 2%, it's slightly in orange because it's one of it's below average compared to the rest of the markets. It isn't just, positive is green and negative is red. These are color coded in relation to one another to give you a proper idea of which ones are standing out compared to one another, rather than just all the markets are down so they're all red, or all the markets are up so they're all green. That isn't as useful if you're an analyst looking for an asset to invest in. You want to look at the ones that are standing out as a good opportunity or a bad opportunity in relation to their peers. And that's why I color coordinated it that way instead. Okay, so I've gone through pretty much everything I thought would be important. There's always, I could talk for hours here, but I want to make sure to give the opportunity for some questions to come in or some specific assets to be explored based on our viewers' preferences. So Balresh, if you see any, let me know. Yeah. Yeah. As you guys may have, go ahead. Sure. Okay. All right. That might be a little complicated. We'll see if we can do that. We'll look at Moon first, which I don't believe would be on here. These are all Binance assets, by the way, with the vast majority of them, of course, being ERC20s, because those are the nature of the types of assets that we have the most data on. But we can look on Sandbase and get a good idea of what's going on with Moon since the big controversy at the beginning of the week with Reddit and the polarizing CEO Yu Spez deciding to pull the rewards for Moon and Donut and one other one that I can't remember right now. But Moon is, of course, the one that is getting the most attention and was always the most popular of those three. And trading volume, as we can see, absolutely was high. It's not an ERC20, so we're going to be limited on what we can show. But we do have trading volume and some social metrics and maybe a few other things. So yeah, the big trading volume spike occurred after the announcement happened. This was on Tuesday, and it's gradually fallen down. So there's less and less interest toward it over time. This looks to me like it's just traders kind of resigned to the fate that Reddit has implemented, which is that Moon will no longer be able to be used as a tip option. It hasn't been implemented yet. I should note there. I think November 8th, I'm pretty confident, was the date that was listed as the day that Moon will no longer be able to be transacted and sent freely from Reddit user to Reddit user. So there are still roughly 3 more weeks, a little under 3 weeks, until that function will no longer be available to users. But obviously, it's kind of a sell the rumor. I don't know if I'd call it by the news, because it's an inevitable date where the crypto asset will objectively be much harder to send and receive. So that almost always will have a negative impact, kind of like an asset that's being pulled. Like if an asset was suddenly taken off of Binance, that usually it's not a sell the rumor buy the news situation. It's just sell the rumors, sell the news, because there's less opportunity for it to be transacted easily. And that's one of the biggest things that can hurt an asset, just as when an asset's listed, that's one of the best things that can happen to an asset's price due to its ease of being transacted. By the way, that's sort of why ETFs are so important and valuable to people, because it increases exposure for those casual crypto traders or investors out there who may not trust crypto exchanges or don't want to deal with the rather small learning curve of getting onto a crypto exchange, but they have a stock portfolio and want to trade that way. So ETFs, the reason why people get excited about them is they know that objectively they will bring in new traders who might be used to a stock interface and not a crypto interface, and can suddenly trade it that way and invest in Bitcoin kind of indirectly and help boost market cap. It brings in new users just due to the ease of use and the increased ability to transact. And that's kind of a macrocosm of what we're seeing with Moon here, as the opposite has happened and it's now harder to move and use. So Moon trading volume doesn't look good. Yeah, I really wish we had some of those metrics here so I could show you a lot more. So sorry about that for the person requesting. But social volume and dominance, yeah, its volume and dominance has quickly just come right back down to earth. This red line is key because we're obviously on a partial day, so the amount of social volume will start to climb a little more by the end of the day, but the social dominance back down at 5.66%. That is an indication that the topic has kind of come and gone, and it's no longer that much of a polarizing topic. Pretty quickly, it's fallen off, I must say. I thought it would be talked about for at least a week or so with a ton of, rebellion and angry pitchforks, but people are kind of resigned to their fate, just like they were when Reddit got rid of third-party applications a couple months ago. That was something people were angry about for a long time, but eventually just accepted and was no longer discussed that much. And then weighted sentiment, understandably very negative right now. People are not happy about the state of Moon, but this isn't really a case where negativity is a good thing. I wouldn't be surprised to see it, excuse me, a little bit of a price bounce, but I don't know if it'll be too significant just due to the state of it being, of those assets being so much harder. Maybe we'll see a bit of a rally the final week right before they get pulled as assets to use as tips, but I wouldn't put too much credence into the negative sentiment going on with Moon right now. So that's pretty much it. We just have social volume, dominance, weighted sentiment, and trading volume. And from what I can see, none of those look like very positive signs for the asset. Normally when we get a ton of negativity and a big drop and a bunch of social volume as it drops, that can be a good sign of a rebound, but the rebound likely would have happened by now. There could be some planned pump and dump of some type for Moon. Knowing Reddit users, maybe there's something right before November 8th that happens, but it's a pure gamble right now. And at least according to metrics, there's nothing pointing to it being being a fluke that this drop happened. So that's Moon. The second question was related to Maker. And what were those specific metrics they wanted to take a look at? I might need help with those again and potentially even finding them, Baresh.
No other asset requests at the moment.
Well, you mentioned Maker. I wanted to know what the specific request was for it again.
Yeah, I know that we had a big dashboard about it back in the day, but I haven't checked it recently.
Oh,
so let me
yeah.
double check if it's still available even.
Yeah, if you can link me, if you find that. We haven't looked at that dashboard since Dino was here a couple of years ago, but I'd be thrilled to look at it again if we can find it. God, what was it called? It was like social.santiment. Just let me know if you find it. I don't want to waste time guessing URLs.
Oh,
But
I'm
we
pretty
can't.
sure that URL you're mentioning that is was faded out, but I think
Oh,
we
okay.
carried some of that stuff over to Soundbase. I need to double check and find it. I will link you to it if I find it.
Well, if it's just here on the sidebar, that would be nice. MakerDAO stats. Here we go. Was this what he was referencing? Total deposits, total liquidations, stuff like that? Okay, let's take a look really quick. We'll just add these to some new charts here. So total deposits for MakerDAO, I can see why he's asking about it. This is a very big spike that's going on today. The highest we've seen since early August or so, over a 2-month high. There are, as of today, let's make sure this is on a daily scale, 244.5 million total MakerDAO deposits. That is massive. It likely will grow by the end of the day. So we could see something in this range by the end of the day here on October 20th, I should say. Total liquidations, let's look at that next. By the way, shout out to the devs. This happens all the time where there are metrics that were recently implemented that I haven't even caught up to speed on, but they are great at introducing new ways to analyze markets all the time, even if it's something very specific to an asset like MakerDAO. So nothing on the liquidation end. There's been no liquidations.
Oh, by the way, I think you're looking at a special case now, potentially, which is the MakerDAO token in the MakerDAO protocol. I think you can look at these metrics while selecting ETH, for example, or
okay.
USDC. I'm not 100%
Would that be a more accurate way of analyzing? Feel free in the chat for whoever requested it to let us know. But yeah, if we want to just look at like the MakerDAO deposits and liquidations from like an ERC20 perspective, I guess this can make more sense. They don't pop up though, Balresh. There's nothing here. Yeah. No, it's okay. I'm no expert on this stuff, and I don't want to pretend that I can understand the MakerDAO kind of the entire way that everything functions, as well as some of those who really focus in on it. Let's see. Oh, sorry, I opened Maker again. USDC on Ethereum. Going back down here to the bottom. Yeah, still nothing. Try USDT. One more try. Maybe they just set it up so it specifically will only show if MakerDAO is, if the Maker asset is highlighted. Yeah, I'll stick to that then. But this is interesting stuff. It's the first time I've explored it. So let me get through the rest of these metrics here. So we looked at no total liquidation since September 11th. Total new debt. Yeah, quite a bit. If we highlight just the past day, big spike, largest spike in total new debt of the past 3 months. Yeah, largest total new debt day since May 30th. That's a big deal here. Total repayments. Another big day here, I see. Largest day looks like it was just short of, no, it's higher. So this is also the highest day since May 30th in total repayments. Protocol total supplied in USD. That's starting to go up again. Yeah, this is one of the highest climb days since it looks like late August. Total borrowed in USD. That's staying very low, so no real needle move there. And then MakerDAO active addresses, this is just the amount of unique addresses interacting, and that hasn't changed much either. So we do see a huge amount of spikes going on for these special metrics like total repayments, total new debt, no liquidations, total deposits are moving up. So certainly intriguing. And I would love to discuss with that user how he interprets that. So I'm not playing a guessing game. I don't want to give any false bullish or bearish information based on these spikes without knowing more and being fully educated on it. But for the person who asked, please get in contact and let us know in the general channel or our support channel, and I'd be happy to have a one-on-one convo with you so I can get up to speed on it for next time. And just while we're here on Maker, those look like development activities fairly average. Not a lot of discussion related to it, despite its price climbing to 1425. It actually got all the way above the 1535 a month ago. Supply and exchange is fairly neutral. Mean dollar invested age is looking interesting. It's had a lot of flattening on its curve for quite some time now. So dormant movement is certainly high for this asset. Little high on the ratio side. So some profit taking going on. This is actually quite high. Over 6 times the amount of profit taking compared to loss taking. Let's look at the whale tiers really quick. Why not? 1425. So we're looking at about here, here, and here. This is the key shark and whale tiers. Yeah, they're pretty flat recently, but look at the trend since early July. Over the past 3 months, they've added about a little over 5% of the supply to their holdings. So certainly a good sign for Maker's present and future that the smart money and the key stakeholders are holding on and slowly adding more and more. Whale transactions fairly low, funding rate fairly neutral. MVRV is important. Huge average trading returns for the 365-day traders, while the short term, they're about break even. So a little bit of a concern considering how high the long-term trading returns are. Maybe the argument would be you'd want to see things cool down, get the 365-day returns down to plus 25 instead of plus 50% plus. Address activity and circulation fairly dormant, and volume and on-chain transaction volume pretty dormant. But yeah, some good looking things for Maker, and I appreciate him, that user bringing up these special stats so we could take a look at those for the first time on our live stream today. We're a little past half the hour, or past the hour, I should say, and I believe we can wrap it up here. I think Maxim, our founder, should be back next week. I can't say for sure, but I'll talk to him. And we can have his expert analysis back on here with me. But in the meantime, folks, I think we've got a very important weekend coming up to see how people react to the first organic pump to 30K since, what was it? Go to last year, open up Bitcoin. Yeah, so excluding the short-term one that happened at the beginning of the week, we were last at 30K, in early August. And I think we should see either a lot of FOMO or a lot of FUD or a little bit of both forming, and we can start to look at the social trends more. We'll update later today on our Twitter several big statistical outliers that are happening and let you know what you should be focused on to see whether this 30K level can hold or whether we're going to see another retrace or if we might be blasting off to 35 and beyond. So stay tuned. Have a wonderful weekend, folks. And for the majority of you that are on the bullish side of crypto, congrats on sticking around through this tumultuous time. And hopefully this is just the beginning for you guys. Take care. Thank you to Balrash, and we'll talk to you next week. Adios, guys.